Welcome to another episode. My name's Jose Najarro, and today we're going to take a look at Boeing. We're going to do an update for April 2020. This company has taken a huge hit in the past few months. So I want to see what's going on, so let's get started. So all the information you guys are going to see today either comes from seekingalpha.com, BA's investors website, took a look at their 10K report, 10Q report, and other articles that I found online that we're going to take a look at today. First, let's start off with the stock price performance, how this company has done. So right now we're taking a look at April 7th, 2020, and the stock ended at $141. It was down 4.6% today, and the company overall has not done really great. In the past year has returned negative 61%, year to date negative 56%, in the past 3 months negative 58%. Obviously, if you did pick it up at the bottom, I think you're up over 50%. So congratulations to anybody who did that pickup on the bottom. But right now, for the long-term investors, it does not seem good in that performance rate. But let's take a look at what this company has in stock. All right, so next, let's take a look at this company's latest earnings. This company announced earnings on January 29, 2020 for earnings that ended in December 31st. So this is way before coronavirus impacted anything, but I think it's still good to see how this company's balance sheet and how their latest earnings were. So they did report non-GAAP earnings per share of negative $2.33, which missed by 50 cents, and they had a revenue of $17.9 billion, which missed by $3.85 billion, by almost $4 billion. So this company is definitely bleeding a bit right now, and we can see why it might have taken a huge hit, but it's that hit that it's taken is that overreaction. Let me know what you guys think. Before we take a look at some articles, don't forget to hit that subscribe button, subscribe to the channel. I'm also streaming on Twitch and Mixer Mondays and Wednesdays, and I have just started a Discord group. All that information should be in the description or in the pinned comment, so feel free to check that out. Alright, so the first article here comes from Seeking Alpha, and most of these articles are from Seeking Alpha. There's one that comes from Yahoo Finance, but all these articles are during the coronavirus, so these are the most updated articles. The first one I want to talk about is Boeing suspended its dividend and its buyback program. It actually suspended its buyback program last April, but they're still gonna hold on the buyback program. And I think they wanted to emphasize that just because the shares are pretty cheap for this company right now. So a lot of people were wondering if they were gonna reopen their buyback program, but at the moment they said no buyback programs. They also canceled their dividends until the end of the year, and the CEO will forego his payment until the end of the year as well. All right, so next I want to talk about how the orders for this company have been affected due to the virus. For this article comes from April 3rd. Boeing takes a max suffer blow as leasing firm cancels $11 billion of order. So this aircraft lessor Avalon, whichever, you guys can correct me in the comments, has canceled about 75 orders from Boeing of 737 Maxes. So that's a huge hit, 75 orders that were expected to be delivered by 2023. Boeing isn't the only air manufacturer being hit. Airbus has also seen a cancel of 4 planes, and about 25 other planes have been deferred to later dates. The next article is with the similar story. Here we see Boeing reports 46 canceled jet orders for February. These 46 canceled jet orders included 11 737 MAX planes for Air Canada. The company in February also booked 18 planes, which gave a resulting net loss of 28 orders. So they had 46 cancellations in February. Then here they talk about in April 3rd that there was a 75 Boeing cancellations. And I think these are the big reasons that this company has dropped so big. So this is definitely something to keep an eye out, and most likely if things continue the way they are, we might start seeing even more cancellations. In this article, again, Boeing is talking about that they are suspending any hiring at the moment, and that leads us to the next article where Boeing confirms that they're actually they actually have plans to have voluntary layoff plans. If anybody close to retire wants to leave the company, this would probably be the time to go. unfortunately, I think this is not that good of news, right? Usually these older engineers are the ones that have all this experience, and this is pretty much telling all the older engineers, hey, leave us earlier. So all that experience is just gonna go away from this company. Next, we'll talk about cancellations in plants. Boeing extends its Seattle area production shutdown indefinitely. So all the manufacturing places in Washington state for Boeing have closed down, but that's not the only place. The next one is here in South Carolina. South Carolina, they just closed down another manufacturing recently, yesterday, April 6th. They closed down one that was meant to build 787s. But again, this is not just a Boeing problem. Airbus also has a facility, I think in Alabama. Yes, in Alabama they have a facility that has closed down. And the next one is the Boeing temporary suspense facility near Philadelphia. So you can see Boeing is closing down all the shop right now. So they say work will resume on April 20th for the one in Philadelphia. No real date for the one in South Carolina, and right now no real date for the one in Seattle. Next, at least let me add some good news to this to these articles. This one comes from Yahoo Finance, and Boeing secures an $85 million deal to aid for some UAV program. Again, $85 million is a lot of money, but when we're talking about them just losing an $11 billion with those previous rejections, they still got a huge way to go. The next article comes from Seeking Alpha. Air Force released $900 million plus to Boeing, and they were withholding $900 million because Boeing had given them some items that were defected. So the Air Force was like, we're not paying until you fix it. But the Air Force is being like, hey, we don't want you guys going down, so we're gonna hold your word accountable that you guys are gonna fix this, and here's the remaining 900 plus from that order. Next week, one article that I don't have here is about the stimulus package. Boeing or at first was saying that they wanted all this help when the government was like, sure, we'll help out, but we're gonna require some stake in the company. Boeing was like, nah, I'm good. We can find money elsewhere. We actually really don't need you guys. And so that's where it's at right now. I know the government, I think today, released an article saying, Boeing, definitely take our money. You guys need it for all these shutdowns happening. But at the moment, Boeing is still saying no. Do you guys think they're going to change their minds? Are they going to say yes in the future? Are they just playing hardball? So let me know what you guys think on that. All right, so next, let's go back to, that's enough articles for now. You guys can definitely go check them out, but let's take a look at some hard facts. Now we're going to take a look at the balance sheet for this company. Remember, this was reported for its most recent earnings, so that was for December 31st, 2019. So it's about 3 months ago, and the earnings were reported in January 20th. The first thing they mentioned is they have a debt of $27.3 billion. So this company definitely has a lot of money to pay off. But first, I wanted to see where that money is going, or in how long does this company have to pay off. So here in the bottom, if you guys can see, I have the total 27. This comes out of their 10Q report or the 10K report. I forgot which one I pulled it off. In less than 1 year, this company owes $7.3 billion out of that 27. In 1 to 3 years, this company owns about $3 billion. So for the next 3 years, which I think that should be more than enough time, I think if all this is still happening in 3 years, then the world is at a whole different place. So I'm just going up to 3 years. In 3 years, this company owes $10 billion. The other 17 is 3 through 5 plus, and after 5 years. After 5 years is where they owe most of the money, owing about $16 billion after 5 years. So that can be 10 years, 15 years. They don't really state. And but again, in the next 3 years, this company owes $10 billion. Take a quick look at my next slideshow. Here I have a quick asset distribution. This company has about $9.4 billion of cash and cash equivalents, and it has $1 billion of non-current investments and half a billion of current investments. So in theory, this company has about $11 billion of quick cash. So this quick cash can actually pay off its total debt for the next 3 years. So that's a good thing. But then that total debt is not everything they need to pay off, right? They still need to pay off employees. They still need to pay off suppliers and all this. So they need some other form of liquidity. And this company does have that. They have a commercial paper program which serves them as short-term liquidity totaling $6.1 billion. So $6.1 billion, a lot of cash. And then they have $9.6 billion of unused borrowing capacity from revolving credit lines. That's about $17 billion, not counting about $16 billion, not counting their about $11 billion in some form of quick cash. Close to 27, I'm pretty sure it's close to $27 billion of liquidity. So that tells me that this company is definitely able to survive. I definitely think this company will be able to survive. Next, this company has customer financing commitments of $13.4 billion. So this $13.4 billion, they say, hey, we're not going to request it from our customers anytime soon because we believe that, hey, we have plenty of liquidity from the things I stated above. But if we do, we can actually pull from here. And the customers are actually working with third-party financiers to provide alternate financing to customers. So again, this company definitely has a nice amount of cash or liquidable assets to be able to pull off and to definitely survive. All right, so next we're going to talk about valuation. So here for valuation, I'm pulling out of two sources that I use. The first source is to my left, and that's on Simply Wall Street. They give you estimated GAAP earnings per shares. Then I use Seeking Alpha, which is the one I have right here on my bottom. Here they report non-GAAP earnings per share, and I like to use this one for forward PE ratio. So first, let's take a look at the one I normally use, which is this one down here, Seeking Alpha. For 2021, they expect this company, so that's 2 years from now, they expect this company to make $13.33 per share. So that gives me a forward PE ratio at the current price that we saw today, $142. A forward PE ratio of 10.65. 10.65 forward PE ratio is ridiculous cheap for me. That is completely cheap. So next, I wanted to take a look at the earnings per share, GAAP earnings per share, through the other one here in this one from Simply Wall Street. But since they do GAAP earnings per share, I actually wanted to take a look at 2022, so 1 year after. Usually GAAP earnings per share are a lot lower when we take a look at same term year, because non-GAAP earnings per share usually have less expenses occur to it opposed to GAAP earnings per share. For 2022, this company is expected to make $18.17. This gives the company a forward PE ratio of $7.81. That is stupid cheap for me. Both these valuations are actually pretty cheap. But I then wanted to see what is the normal PE ratio for this company. So then I used my other favorite source, lazyfa.com, which gives me the quick metrics. The price to earnings ratio on average seems to be around close to that 20. Let's take a look at that GAAP earnings per share. That would give this company a 2022 price of $360. That's over 100% returns right now with the current stock price, assuming a 20 PE ratio on 2022 GAAP earnings per share. So for me, I'm definitely liking the valuation. I think the company is pretty cheap for my taste right now. I did have previous ownership in Boeing. I just want to let that known. But I think right now this company is pretty cheap, so I'm gonna continue to average down for this company. So my thoughts, I honestly really like it. That's it. I really like it. What do I like about it? I like the valuation. This company has plenty of the PE ratio for 2021 and 2022 are pretty low, giving me good confidence that I will be able to make a nice return from this. Again, I can always be wrong, but I feel like with these valuations, my confidence level is a bit higher. The next thing I like is the balance sheet. This company does not have that much total debt, $10 billion. So the amount of liquidity for the next 3 years, this company has plenty of liquidable cash to be able to pay that off. And then with all the customer financing and its borrowing capacity, I'm pretty sure this company can survive the next year with this kind of money. What I don't like, obviously, is the things I don't like is this coronavirus can actually keep going. We don't know when it's gonna end, and that's a big impact. It's a big unknown, and that big unknown is what's causing these stock prices to continue to drop. The second thing I don't like are these huge amount of companies canceling their orders, right? An $11 billion order cancel it's no joke. That's insane. So those two things are definitely in the back of my mind, and those should be in the back of your mind if you're thinking about investing in Boeing. Always do your risk analysis, always do your own due diligence, and see how the company is doing. Finally, that's it for me. Let me know what you guys thought about this episode. Make sure to post in the comments, and also don't forget to hit that subscribe button. And hope you guys have a good night and take care.